What if just residential investments and commercial investments weren't enough for you to build your wealth? Hi, I'm the co-host of the Property Pals Australia podcast, Jaryd Krause.
And I'm Sam Powell. And in this episode, we get to talk to the wonderful Salena Kulkarni. She's a chartered accountant, author, and basically one of Australia's leading wealth coaches. And she talks about, residential is not the only way to create wealth, and not only just in Australia, but also international markets. So we had some really, really deep conversations, didn't we, Jaryd?
Yeah, amazing conversations. We also talk about like how commercial property investing has become the flavor of the month over the last 5 years. What other alternative strategies there are for investing, and we're not just talking about alternate investment strategies in terms of like different markets. We're talking about property investing. Also, how much money do you need to get started? Where you can get started, and what sort of ROI that you can predictably get through these different alternative strategies. She mentions 5. There's a plethora of them. She also has an amazing course that we will link to that you guys can get a bit of a discount and a deal on as well. She is just an amazing human that is just looking to help people build wealth and have a better lifestyle. And you guys are going to love this podcast as we did, Sam.
Yeah, if you're thinking 8 to 20% return on investment, then this is definitely the episode for yourself. But as always, this isn't the only way that we can help you for free. So we'd like to throw these ones in there. Check out the link, head to propertypals.au/resources. We've got some really great tools there to assist you. I know you're going to get a lot out of this episode, as much as Jaryd and I did, so we'll see you on the inside.
Welcome to Property Pals, the podcast where we share everything around how to build a property portfolio, from researching areas, financing, structuring, buying, selling, and reinvesting to live a life of financial independence. As a disclaimer, any information shared by myself, Jaryd, Sam, and the Property Pals team is strictly general and should not be taken as constituting professional advice. You should consider seeking independent legal, financial, and taxation advice from a qualified professional. Salena, welcome to the podcast. Thank you so much for your time.
Oh, pleasure. It's exciting to be here. Thank you.
Yeah. We were just chatting off air how we had heard about you. You've done some amazing things, and we want to share that with everybody in the pod. We're going to, obviously, because we're a property podcast, we want to stick to property, but we will probably jump in and out with different alternative assets that you help people invest in. But you work with people that want to build their wealth. So like, what type of people do you work with? Where are they at in their wealth creation journey? Typically?
So, yeah, it's a really good question because it's definitely something that's evolving. For a long time, I worked with a lot of just regular mum and dad investors, if you like, and just helping them understand how to think about real estate. So I've never been a buyer's agent or anything like that, but I think in my heart, I'm a natural born strategist. Like, that's kind of how I see myself. And from there, it evolved into I cultivated my own interest in alternative assets. I don't know how much you guys know about my story, but I was an avid property investor for many years. And then I think it was in about 2009, realized that, I was still at least 25 years off having any kind of wealth that I could rely on and live off. And so I did a hard pivot at that time into like, this particular wealth model isn't working for me. What else can I do? And I really went down a whole series of rabbit holes and got very interested in alternative real estate deals. And then people just started to come to me to say, well, how does that work? And, how could I get involved in it? And what's evolved is I've started a community, which is really for business owners who, maybe they understand investing in real estate principles, but they're frustrated with the cash flow or the outcomes that they're getting. And so it's really about strategizing and tweaking and educating and learning about how's a different way that I could approach wealth. So that's the core program and the core thing I've done for the last, 6-7 years. But even more recently, I've the people that reach out to me most often have actually been young adults like Gen Z and millennials. And for a couple of years now, I've had to say to them, like, I've got nothing for you. Like, you need a bit of money to do the sort of things that I'm interested in. And so more recently, I've endeavoured to kind of carve out some time, and it's a mission-based project, but I'm working with a lot of young adults now who are trying to break out of survival mode and even think about starting to invest. So they're my two completely polar opposite groups that I work with now.
That's cool. It's so good to be able to have that strategy for wealth creation when you've got money, and then come down to people to lift them into that and bridge the gap. Seems like you're trying to do, which is awesome. So when you say, it would be great for us and everybody to learn from your experience, when you say you were into property investing and you realize it wasn't really, you're 25 years off being able to be in a financial position or be financially stable, or whatever you meant from that. What sort of property investing were you doing that wasn't actually working, and why? And then what did that evolve into in these alternate property investments? How did that evolve?
Yeah, good question.
Big question. Like, there's a lot in there.
So I was just interested in basic, you buy and hold style of property investing. Did some development, just like duplexes and things like that as well.
Okay.
But the big aha I had was, and really what started me thinking along these lines was my husband's a chiropractor. He works with his hands. At that time, his wrists were starting to get a little sore. And so the kind of really silly vision that I had was, well, if we could invest in a way that kind of brought in a little bit of money to cover a few bills, he could take his foot off the gas and just work a bit less. So the initial idea was, I just want to cover a few bills. And at that time, we were investing in a bunch of properties. I think we had maybe 8 or 9 properties. So, we were pretty aggressive about it, and we squirreled and saved and, shifted money around to make that happen. But what I realized...
Are these like units, duplexes and residential sort of?
Mainly just houses, really. Okay. And then we'd started into development at that time as well.
Cool.
But essentially, the big aha that I had is that, your net worth is this absolutely insane vanity metric. Because, it's one thing to tell yourself, oh, look on paper how well I'm doing. But it's a completely different reality to say, well, could I actually either stop working or pivot my career or, rely on this asset base to generate some kind of income that I could depend on? And the reality was, and Australian real estate is absolutely awesome. Don't get me wrong. It is awesome for growing your wealth, but it is absolutely shithouse for cash flow.
Yeah.
And there are some exceptions to that. And so I don't want to taint the whole thing, but in general, most real estate in Australia is an attempt to grow your net worth in a leveraged way. And I realized that having a high net worth looked good, sounded good, made me feel good, but it did nothing for my life. And so that was when I went, this is rubbish. I need a different approach. And so I started to look at, I've got all this capital, but how do I make it work a tiny bit harder for me? So I didn't want to upset the apple cart, because I still really believe in Australian real estate, for example, and still hold a lot of real estate. But I wanted to know, how could I take a small portion of that and put it into assets that generate predictable, sustainable cash flow that I could actually bank on? And so just to give you a sense of it, I was like, well, if I could take 10 or 20% of my capital and put it into something that gave me 80 to 90% of my passive income, that's an epic outcome. And so that's kind of the game I started to think about. So it's not so much that I threw the baby out with the bathwater, but, you know, I'm just not that impressed when people tell me their net worth. And unfortunately, we live in a society where that is held up as the holy grail. Mm-hmm. And people say things to me like, I want to own X number of properties, or I want to get to a certain net worth. And my response to that is, well, why? For what? For what?
It's a great question, because that's what we do, right, Sam? That's what we're about, is like we don't care about how much somebody has. We care about like their happiness levels, and that can only happen through lifestyle. Like, what's the reason for doing it? Is it so you can show off, or is it so you can just show up in your life and be happy?
So it's definitely can be the devil as well, right? There's a really great book by Ryan Holiday called "The Ego Is the Enemy," and got a lot out of that one. But yeah, it's interesting what you're talking about, Salena, because I guess you're a qualified property investment advisor. I've also got that banner under my belt as well, and I wanted to get you on this podcast as well, just because you've gone through that residential. Obviously, there's commercial real estate, and you're going down, and you're progressing, and obviously you're dealing with high net worth individuals. So it's important for people to understand that there isn't just one way to do it. And as a strategist myself, I'm sitting here, do you develop, do you build that residential and then sell down and go into commercial? Like, there's so many different things out there. And then you add on, the luxuries of social media and Instagram and all these influencers. And a lot of people do get stuck in analysis paralysis. And what Jaryd and I were trying to, I guess, get out there is helping people to find these, diamonds in a rough like yourself that have the experience, but also like that, I guess, that passion where you don't just come in for, a few years, you make your money through consulting and then you disappear, like a few of the development buyers agents that are out there, or even buyers agents in general. It's been such a booming industry. I got out of valuation to get into that, and then I'm like, wow, this is insane. So could you help, I guess, when you talk about alternative investments, I don't want to, obviously there's some getting behind the veil of your membership and everything like that as well, but can you help the listeners sort of understand what you mean by alternative investment strategies? Because you talk a lot about it in your book, The Freedom Warrior, right?
Yeah. So I think I should pre-frame all of this by saying that I like to think of myself as investment agnostic. Like, I don't actually, like, people get really passionate about their strategy and what works and what doesn't work.
Right.
And I don't know, like, I'm totally open to people telling me that I'm wrong or that there's other strategies that are better. So, I always like to start there. I'm trying very hard to not have bias around certain strategies, but, every person is unique. And you need to take into consideration people's risk tolerance and what they're prepared to carry and how much suffering they're prepared to go through when you're kind of mapping out a plan. And I'm a huge advocate, and I'm happy for you to ask me anything about anything really, Sam, but I'm a huge advocate of a no advice model. And when I say that, what I mean is, obviously people come to you and they're saying, well, what should I invest in and what strategies should I undertake? And I'm always, the starting point is, well, what is the outcome that you're seeking? Like, what do you want? Like, what would be a really great outcome? And then kind of showing people, well, here's a few pathways for you to get there. So it's like, what do you want, by when? And then really what people want to understand is, what are my options? Like, how could I achieve that? And so it's not my job to say to people, you should invest in this, this, and this, or you should invest in alternative, or you should do developments. It's more to show people there's lots of ways to skin the cat. There's lots of ways for you to get where you want to go. Does it really, like, it's not for me to tell you that this strategy is the right strategy, because, say, for example, development, as you know, can be super lucrative. But honestly, I've done developments which have shaved 5 years off my life.
Yeah.
Like, honestly, like, they've turned me grey. Like, it's terrible.
Yeah.
And then alternative investments, they are awesome. But if you do not know what you are doing, the minute you put your head into the world of alternative, you will see it's not something spoken about, but when you put your head into it, there are thousands of opportunities. And then so like, how do you distinguish between a good deal and a bad deal? So the community in a nutshell is really teaching people the fundamentals of wealth building. And people think they know a lot about wealth, but what does it really mean to like be the orchestrator of your own capital? What does it really mean to create culture in your family so that if and when your children and your greater family participate, that they are going to be good stewards? What does it mean to tell a good deal from a bad deal? How do you identify if a strategy is a fit for you? So it's really like, you know, it's funny you touched on it. It's as much about personal development as it is for, you know, building wealth. And you know, this is a really big one. Like, people are overcome with grief around setbacks, losses. And so I love talking about, you know, because nothing ever goes according to plan in my, you know, in my, like, people like to tell you, oh, this path to riches is really smooth, but geez, bananas. I mean, I've lost 7 figures, you know, in losses. And so, you know, what I think I'm really good at is digesting loss and then understanding it's part of the game. So we spend a lot of time talking about loss. What does it mean? And how do you digest it? And how do you come out the other side? Because it's a myth to think that, you know, you're not going to come undone every now and then. So I know I'm going all over the place here. I'm not sure if I'm answering the question, but I think nobody's game plan is the same. Everyone's got a different game plan.
Absolutely. And so it should be completely custom to what somebody's goals are. And their goals should be based on what fulfills them, and what fulfills one person may not fulfill another person, right? And that's why I love your approach, which is like, a good therapist doesn't tell people how to live their life or what to do. They don't tell them. They offer, like you said, they offer suggestions and help people like lead them down the yellow brick road. Basically, a great strategist is somebody that just asks great questions. They can help people get the ahas themselves internally to go, okay, that makes sense for me. Thank you. And it's like, because they have those ahas of like, it feels like they have come up with that investment strategy themselves, right? So they embody it more, and then they go down that path with a lot more vigor than just like, I'm just following this because I was told to do so, right? And typically, hopefully, you can have less failures. But if you have a failure, it's a part of the journey. You're going to learn from it. It's going to make you stronger as right? Like you said,
Yeah.
it's let's be real. Like, it's going to cost you money on the path. Like, my last property cost me. So I missed out on a property. Missed out on a couple of properties last year, actually, didn't I, Sam? It was a frustrating journey, and cost me some money until I got the right one.
Yeah, look how much you learnt, mate.
Exactly. Like, it was a crazy good year of learning.
Yeah, that's why I guess I'm trying to lean into people that you reduce your risk by working with people that have done it, before, right? And
yeah. I think this is beautiful, and I think, honestly, if I think about wealth and investing as a personal development journey, it's really about getting to know yourself.
Mm-hmm.
And the one thing, like, the first thing people often say to me when they come and work with me is, show me the deals. Like, what are the deals about? Like, what are the strategies? And in my opinion, it's almost like that's the least important part, because the problem that I think most people have is they can't judge risk. That they're, going through life and growing your wealth and ratcheting yourself up this well, which is covered in glass shards, is really about getting to know your own risk tolerance and being able to quantify the risk in opportunities. Because, I think people get so caught up in, if you were to map out the pro forma or the profitability of a deal on paper, they think that that's the only thing that matters.
Right.
And, then you got to kind of layer over that risk and life and black swan events and all sorts of things. So I think I guess if I were going to argue what is the most important thing, and you've already touched on it, Sam, it's find people to have really good quality conversations about money and wealth, and then make it personal, like implement it in your own life.
You can thank Jaryd for that. He's the one that wanted to start up the Property Pals Australia podcast, and I didn't realize how beneficial it really was to my mindset. But even what you just said then it's like, because I'm that person, right, where you're looking at, and I was, and I've evolved as well, but you're looking at the cash flows, you're looking at the numbers, and you're making your decision based on that. But when you get into this space, like, the data can be manipulated, and you can change certain things to make it look prettier than what it is. But yeah, the emotional, what do they say? Like the impact, like the emotional impact of loss is like far greater than the gain that investors go through. And I'm sure we've all lost money in investments here, and I really we've also made good money as well, but it's the losses that stick with you over time. That's for sure.
We are meaning-making machines, and so when a loss hits us, we either make it mean something about ourselves, or we make it mean something about the world. But on the flip side, when we win, like let's say we have a success, we do the same thing. And so the problem with, say, for example, a lot of people that did really well, during the COVID boom, is they made it mean I'm a good investor. Mm-hmm. I must be really good at this. And they just haven't been through enough cycles to realize that, it doesn't take much to turn what seems like a winning streak into a losing streak.
I want to doubt this. I thought this would come up, and I want to pick your brain because it's. I mean, we've always done a few different podcasts, and maybe it's just their profession. But I'm always thinking in the future, and I know I need to be more present in my life, is what I'm trying to do. But I guess my question really is based around. We've seen, especially in Australia, you mentioned the COVID boom, but that COVID boom was also off the back of a really strong few years. We hit the bottom in Australia, so around that 2011, 2012 path, and then we've seen really strong growth, right, in a lot of asset classes. And there is this winner's curse phase of this cycle that you hear floating around, and it doesn't if you look at any stock chart, it has to pull back to go higher. So that's my question, is leaning into you now. Like, what are your thoughts? I mean, do you think into the future like that, or have you learned to just try and just take a different approach to it? Like, where's your head at with the next couple of years, and how are you helping your clients think through it?
Yeah, look, I mean, I think as I've become older and wiser, I've become probably more conservative, and my training as an accountant has meant that I'm already conservative to start with, and so I'm highly skeptical around boom times. So during COVID, when everyone was getting all this money and the real estate market was going mad, like my overall portfolio went up massively. But I mistrusted it. I people were saying this is the time to be buying. And I just, in my gut, kind of felt like, but is it? I'm really not sure. And, I have taken a hit on the cash flow of my residential property over the last 18 months as interest rates skyrocketed. I'm a huge believer in who knows what the future holds. Like, you got to play the game as if you don't know what's going to happen. And, one thing for sure is there are going to be setbacks. And so I'm always trying to look through the lens of if everything turned to custard tomorrow, where are my vulnerabilities? Like, where could I possibly be in pain? And, you guys would know this. Say, for example, the last 5 years, commercial property has become flavour of the month. And look, don't get me wrong, it's a great strategy. But the way that I hear people talk about it, it's like it's the silver bullet or the holy grail that's just been uncovered. And what I'm seeing more and more is people jumping into those kinds of deals because they're sold on this idea of cash flow. But the reality is, in the current environment, like, it's not there. Really, it's not like an exciting retirable cash flow. And and there's, commercial real estate comes with a bag of snakes that people aren't thinking about. So, I don't know what the future holds. What I know is that preservation, and you may have heard me speak about the seasons that you go through on your wealth building journey. You start in spring, and spring is all about how do I just create surplus so I can, get started. And then you move into summer, and summer is all about traction. How do I apply leverage to kind of ratchet, grow my capital? And then you move into autumn, and most people get stuck in summer. They kind of maybe put 1 to 3 property investments in their portfolio, and then they hit a wall, and then they just stop. But smarter investors will say, well, what else? And so you'll transition into autumn, and autumn is all about, optimization. How can I take the pool of assets that I've got and just get them working a little better? Not completely throw them out and start again, but how do I get it a little better? And maybe for some people that's about improving the cash flow. Mm-hmm. And then you move into winter, which is about preservation, building annuities, simplifying, getting rid of complexity and risk. And so for me, I'm probably transitioning into winter now. I could give a rat's razoo about trying to grow my net worth. I don't care. I haven't cared about that for a long time, but I just think that's, of all the things to measure, that for me is the least important metric. And so I'm at a stage where I'm like, I just want to preserve what I've got. So I'm constantly looking for chinks and vulnerabilities, and where is my thinking flawed? What have I missed? And so my priorities are going to be different to someone who's in, like I think about my 19-year-old son, who has got a very high risk appetite right now, and is tuning into all sorts of social media about get rich quick.
Yeah. Is he trading currencies or?
Oh my God, I don't even know what he's doing. He's got a natural entrepreneurial streak to his credit, and he's making great money.
You know what I love about this energy? I was thinking about it the other day because I've got some younger people in my life where I live over here, and they have this energy that's just go at all costs. And I can remember myself going at all costs as well. And I think, I mean, as a mother, it would be hard to watch for sure, but that's where they're going to learn the most. They're going to fail the most and learn the most. And that's the character building phase. So I like, power to him. Like I think if he's got that, and he's young and he can lose some money and stuff and learn from it. I think it's because I have tried to share some of my values of investing on younger people. I'm not an old man, but I've the people that are like in their early 20s coming out of school to be like, hey, like I wouldn't do this, but that's what I wouldn't do with where I'm at in my life. But if I think about my age back then, I'm like, I'm not going to listen to this guy. I'm going to go for it. Like I can at this stage, and I've got the energy to do so. So why not? Right. So
I agree with you. Totally agree with you. And I'm super proud of him. I think he's done an amazing, like the money he's created in 1 year since leaving school is phenomenal.
That's so good.
He's a good saver and all the rest. And the program that I've built for these young adults, is called I Can Be Wealthy. And the whole point of it is to say, like, it doesn't matter. I don't care what you invest in, but just get some fundamentals in place around the stewardship and care of your money, so that, really the goal of the program started with, I just think every young person, regardless of what investment assets and classes they believe in, should put one piece of real estate under their butt as a safety net.
Yeah.
And so the reason for that is, and this is probably not a great story, but about 2 years ago, I saw this woman starting to camp on the road across from the gym I go to. And one morning it was like bitterly cold. I went to take her a McDonald's drive-through, which isn't great, but and she sat up and she was awake, and I was expecting that she was either an alcoholic or a drug addict or something, like mentally unwell. She was so articulate and so lovely. And it turned out that up until, a month prior, she'd had a roof over her head and she'd lost her home. She was an admin assist in the public service. She'd been quite senior. So she'd just made a couple of bad decisions in the last 2 years at the end of her life when she couldn't afford to, and she'd lost her home, then she was living in a car, and then she lost her car, and now she was living on the street.
Wow.
And something about that exchange really shocked me to my core. So I started to do all this research, and there's this whole thing called the grey tsunami, which is homelessness and like financial distress amongst retirees. And it's all because they just made one or two bad moves. And then I started to look at the data, and there is this huge conversation going on in social media where finfluencers are saying things like, whatever you do, don't buy a home. It's the worst investment ever. And the reality is, and this is the most interesting data, in Australia, between the net worth, and I'm coming back to net worth of people who buy a home versus those that don't and who say they're going to invest is a 40 times difference.
Wow.
Like people who have a home versus not. And the aged pension wasn't intended for people who don't have a roof over their head. You actually, I think Anglicare reckon there's 0.7% of rental properties in Australia that are affordable if you're on the pension. So this is a massive issue. And that was the kick up the butt that I needed to go, right, I need to build something for these guys.
Yeah.
And I want to try and get them into their first piece of real estate within 3 years. Just so that go off after that into the sunset and invest in your crypto and do all of that.
Mm-hmm.
But just have this one thing as a safety. I don't care if you live in it or don't live in it. But by the time you're retirement age, if everything else falls apart, you've got that roof over your head.
Yeah.
And that's kind of, the opposite end to the high net worth stuff I know.
It's really, I love that advice and that story. Thank you so much for sharing. It's to have something that works without you, like builds wealth without you. Like you don't need to be smart to buy a property and run it and manage it. If you have one or two, three, whatever it is, it will just do the work for you. And that's a really good lesson for somebody that's, say, coming out of school, maybe they got, maybe your son buys a property in 2 years or a year or so, and, he doesn't have to think about it, and it's going to build wealth for him, and it's a good fallback. I
don't even think it's about wealth though, Jaryd. I mean, the data shows that people who have a home are wealthier. I think it's really an insurance policy.
Also, the way you see how people that are wealthy carry themselves through lives, they don't have stress because they know they've got these blankets of comfort, right? And if you're younger, at a young age, and you purchase a property, say at 22, in your early 20s, and maybe by one, maybe by two, but the way you can live throughout your life is with so much more comfort. Like that's a type of ROI that I don't think people really do talk about, like your emotional ROI.
I think the way that I describe that is, and with all investing, there's a tangible ROI and then there's a whole lot of intangibles. And that's definitely intangible.
Yeah, well, it's hard, right? Like, and obviously you've developed this course, and there's a lot of information out there. What I've found is it's hard for people to actually stay on track, and they need someone accountable. So, hats off to you for developing something that is definitely needed, because the world is, there's a multi-billion-dollar marketing industry convincing you to buy things that you don't necessarily need. So it is. It's hard, and we're all sort of pointing fingers, and then you take into account, cost of living and inflation and debasement of currency. That's one thing, and then the world's full of trickery.
Honestly, like this course is a funny thing. I thought I would just smash it out over a weekend. I thought, this is going to be really easy. I'll just get it done in a weekend, and it took me a year because. Yeah. The deeper I went on, like the way that millennials and Gen Zs learn is different. They've got shorter attention spans. They want to be entertained. So, it's storytelling. And so the people who have been most interested in this are parents probably parents my age whose children aren't doing a great job with their money. They're just, either blowing it or making poor decisions. And so I genuinely think that, I've spent, I can't even tell you, probably about $500,000 on courses and education over time. And like at the moment, I actually thought about giving the course away for free. And I've learned that when you do that, they don't value it. So it's very cheap, is all I can say.
It's like if I say, here's a book, if you read this book, it will change your life. It's free and I give it to you. And then the opposite alternative is that I have this book and I say, you need to buy this book, but it's worth $1,500. It will change your life.
Yeah.
Of course, the accountability of buying a $1,500 book, you're going to read every single page and you're going to put so much more value in it. I'm conscious of time, Salena. I want to also, people are going to be upset if we don't get into at least a couple of strategies, alternative investment strategies that you share with people. I think the foundation of what we mentioned in terms of mindset and longevity of investing and wealth building has been set really well throughout the start of this podcast. When people come to you, typically how much do they need to start investing in alternate wealth strategies? What is like a price range, I guess, and then what would be like maybe the 5 go-to sort of suggestions that you'd throw out to people? I know that's hard and difficult because everybody's situation is different and you've got a plethora of them, but are there a couple that are pretty like tried and true that you share as well?
Yeah, so there's a lot in there, but
there is.
I think what I used to say when I first started was, look, if you've got like 500,000 that you want to allocate towards this sort of strategy, it will get you a meaningful outcome, even if because over the years, as opportunities have sort of gone up and down with what's happening in the market, you could earn anywhere from sort of 8 to 20% per annum on your money. And me being more conservative, I was saying like you should aim for 8 to 12% net returns after everything. So that's a more conservative return in that space.
Cool.
There are 5, but you don't need $500,000, but that was just the number I pulled out of the air because I was kind of like, well, if you at least earned 50 to 80,000 on that would be a meaningful outcome for you. Yeah. But the reality is, as I said, there's thousands of opportunities, and pretty much how I've spent a lot of the last decade is just vetting opportunities and getting lots of cuts and bruises by investing with the wrong people in the wrong markets and the wrong strategies and doing all of that. So as I've kind of learned, I've become more and more and more conservative. And so there are 5 buckets of strategies. There is, small private funds, which can invest in multifamily, houses, and all sorts, like lots of different assets.
Yeah.
Then there's joint ventures where you partner with someone. They are the boots on the ground. They run the deal, and you get a profit share. Then there's property syndications, which you'd be familiar with, which is where a deal maker facilitates a whole bunch of investors buying a single asset. So it could be an apartment complex, it could be a self-storage facility, it could be any asset, property related. And then there's Be the Bank, which is an awesome strategy and that has really stood the test of time, especially through this high interest rate environment where, again, you give your money to a deal maker. The funds are loaned only on property deals. I mean, there's obviously – so alternative investing as a word, by the way, is very broad.
Yeah.
And I just need to be very clear that when I talk about alternative deals, I'm talking about real estate backed only. Okay. And even then within that, I'm only talking about deals where I directly own the assets, not where I'm giving my money to someone who owns a company, who then invests in the assets. So there's lots of layers of due diligence to this, but And then the final one is turnkey real estate, where someone puts together a deal that's cash flowing and you just end up buying that deal. So The deals and the strategies that have proven. So a lot of deals hit a lot of trouble over the last 18 months because of those interest rate hikes, and not so much for any other reason than they happened so rapidly. So, for example, if you bought an apartment complex and your goal was to kind of gradually renovate them and increase the value and put up the rents and all of that, the massive interest rate hikes kind of, had a massive impact on cash flow, and a lot of those deals struggled or fell over.
You've also got the cost of building for renovation as well.
So I'm so conservative that I don't like ground up construction. So I don't go into anything that requires full construction. It's already there, and you're just value adding. So I'm very specific about what I like. But the lending side has completely ballooned as an opportunity in the last 2 years. The downside to that, it's attracted a lot of cowboys into the market.
Yeah,
everyone's a lender.
Yeah. So you mean be your own bank?
Be the bank in the sense that you're lending on real estate deals, but because people don't understand, people who are new to that space don't understand the nuances of it. You can still get into hot water if you lend on the wrong deals. So, I'm really interested in people who have proven track record, who are managing the risk, who understand downside protection. Right. And I would rather take a modest 8% return on my money than chase. There are a lot of people out there offering 13, 14, 15% returns.
Yeah.
But
that are new to the market. They've got to do that, and don't have experience. So, I think there's more risk in it.
Well, interestingly, philosophically, a lot of people said, well, interest rates are higher, so I can charge more for private lending. And my view of that is that the better operators have said, no, I won't charge more. I just want to consistently provide good quality, lending criteria and just not be greedy.
Yields are
it's a great strategy.
So yield's a reflection of risk, right? If you're taking that higher, you're going for that higher yield, you're taking a slightly higher risk. So I guess it goes back to education. Some people just, they don't understand that.
Well, that's the problem. And this is why I think, when I started to think about how do I introduce people to alternatives, it has to be backed by education. And so, I say I'm a strategist, but first and foremost, I'm just an educator. I don't endorse specific deals. I have a pool of people that I call my trusted advisor network. And I get, they don't spruik, they don't pitch anything. They're not allowed to. It's all about educating you on how do these strategies work? What are the pitfalls? What are the landmines that people don't understand? Where can things go wrong? And so, an uneducated person will look at alternative investments and go, well, which one has the biggest number? That's how I'm going to choose. And my goal, and when they join my community, they say, Salena, are you going to tell me which deals to do? And my answer is always no. And by the time you get to the starting gates and you're ready to start doing deals, you will not want my opinion because you'll have clarity about what matters to you. That's it.
One of my things is money is great, and the typical thing is the more the higher the ROI, typically it can be the higher the risk. One of my filters is what has the least amount of stress first, which typically ends up being something that has the least amount of risk, which has less ROI. That's because I'm going for my lifestyle, which is my foundation of what I'm trying to improve always, is minimal stress. So I think it's a really good thing to process to work backwards. Most people money, and I can get it when you're in the position of I'm a young kid and I don't want to be in survival phase of money, go for that first. But eventually, hopefully people can earlier learn that lifestyle first and then work your way backwards, less stress, which is typically less risk.
Well, depends too, mate. Like you're high risk in that you buy online businesses and you run online businesses. That is
Correct.
It's not stressful for you because you've been doing it for over a decade now. But mate, like that environment changes so fast. It's insane. So you're funneling your probably high stress income into low stress income. So you've got that nice balance. That's how I see it anyway.
Yeah, absolutely. Like yeah, you're right. When I was young, I was just so much risk in the online marketplace.
But I think what you're really speaking to is this whole idea that because you have experience and you're educated on online business, that in itself is what de-risks it. And the problem that most people have is they don't have the education or experience to back something, and therefore it's hugely risky. So we talked about development before. Development for someone who's never done it before, who doesn't understand the pitfalls, is hugely risky.
Yeah.
But, people who do big developments all the time, it's a walk in the park because they understand there's a process.
They've learnt the lessons along the way. So you mentioned just 500K for alternate investments and a bit of ROI there. Thank you for that. What does it look like for somebody that's maybe got one property or a home or maybe 2 or 3 properties and they might not have 500K cash? Do you typically have them build a bit more of a foundation, a base of like holding properties first, or what sort of like, you said there's no like 500K is just an example. Do people start with like 250 sometimes, or?
Yeah, look, I should have clarified that. Apologies. So I came up with the number 500K as a totally random, like, what do I think is a sensible amount? Because obviously if people are committing to working with me for a year or 2 or 3, they've got to get return on their investment. So they need capital invested to justify that, right?
Correct.
But the reality is, like, part of the reason I love alternative real estate deals is because the amount of capital that you put per deal can be quite small. So, for example, you might put, anywhere from $1,000 up to $100,000 per deal. And so what that means is if you've got, and let me pick a different number, let me pick $1 million. You've got $1 million worth of capital. Mm-hmm. Maybe that's 10% of your net worth and you want to invest that in a bunch of different deals. Like, I love the idea that you can take small bites of lots of different cherries in different strategies with different deal makers, so that if any one of those or a few of those fall over, you're not going to die in a ditch over it. Mm-hmm. The problem with being, lower capital, lower net worth is, let's say you put $50,000 into this one deal and they're offering you a 10% return. If that falls over, it's going to hurt. Like, that hurts.
Yeah.
And so it's not, I go back to the seasons idea. It's not that you don't have enough money to do the deals. You've got enough money to do the deals, but you've got to ask yourself, what season am I in? And if you're in the season of summer, where the goal is to get as much traction as possible, doing alternative real estate deals makes no sense.
Yeah.
No sense at all, because that's predominantly a cash flow strategy. Why would I bother going to the effort of learning and understanding this if I still trying to grow my net worth? So it's about, like, always start with, what season am I in? Because that leads here's the priority. The priority is this. And that's why I would say, if you've got 1 investment property, maybe 2, and you're in the season of summer, like, your goal is, how do I ratchet up my net worth? Because that's going to then give me capital to have choices to try other things when I get into autumn.
Yeah. I love the season analogy. Thank you. Sam, do you have anything else to ask before we wrap it up? It's been so good to chat, Salena.
International, national, what's your, obviously the connections you have is de-risking all those projects for your clients, because it takes years to, no doubt, find the right people. But is there connections internationally as well as throughout Australia, I'm assuming?
Yeah, so alternative real estate deals, when I first started getting interested in them, were predominantly, I looked at the global market. I looked at At the time in the global financial crisis, Greece and Italy and Spain and UK and a lot of other countries. And where I came back to was actually predominantly the US. Their market just has a series of metrics that we just can't fathom. So an example is, you could buy a property for $150,000 back then that would earn you $1,500 a month in rent.
Wow.
And and $150,000 would get you, I think, a relatively beautiful house that you or I could live in. Like it was amazing. And so that combined with the way that the market is structured, like in Australia, if you want to buy a property, there's only one way to transact that property. You've got to engage a conveyancer and it goes through all the paperwork and you then transfer the property. Whereas in the US, there are many ways to transfer title. There are many ways to structure deals. And so that market, what's happened is it's evolved into a very entrepreneurial asset class, and we just don't have that here. So there were lots of things that made that attractive. And so with the metrics, those deals just lend themselves to cash flow. Like it's just easy to get cash flow out of those deals from day dot. There's a lot of pitfalls as well if you trust the wrong people, but
even today,
in general,
like 25, like it's still good for cash flow in the States.
It's still infinitely better. It's very, like when I describe the Australian real estate market to my American friends, they just scratch their heads and say, why would you bother?
Yeah.
Like they would say to me, Australian real estate is a speculative asset class. You are buying something and you are hoping that it grows in value. And if it doesn't, you make no money. And so that is how most millionaires, including myself, have created their wealth in Australia, is because we speculate about the price of real estate will continue. Whereas in America, they don't speculate. As obviously they do speculate, but they don't. There are plenty of opportunities there. And in Australia, just culturally, real estate investing is a national pastime. Yeah. In America, the percentage of people who even think about real estate as an asset class is a tiny fraction. So when I'm there, I'm always looking like, what magazines have they got? Like what? And they got nothing.
Right.
They got no magazines that are in the newsagent, nothing. So internationally, the opportunities are better. And this is where that whole idea is. That might sound very risky, but the way to de-risk is to increase familiarity. And the way you increase familiarity is you just got to get educated about it. But there are alternative deals in Australia, 100%. They're just fewer and far between. And generally, the opportunities here are more about growth and capital rather than there are some cash flow deals here, but it's hard.
Yeah, I guess the always risk with thinking international is obviously you're transferring your money across borders, and then trying to get that money back if you need it, or you're susceptible to, I guess.
It's not. It's a very simple and elegant solution that I've uncovered. It's taken tens of thousands of dollars of lawyers and accountants to figure it out, but it's not complicated.
Oh, we'll leave it on there because that's a really good hook into people to finding out more about yourself. So yeah, well, I guess we don't have to leave it there. Keep going as we want, but can you give a bit of a plug? Where's the best place to learn more about how you're changing people's lives?
So if you go to salenakulkarni.com, I think that's the catch-all. Otherwise, freedomwarrior.com and icanbewealthy.com.
Awesome. I love it. Thank you so much for coming on, Salena. Thank you so much for your time. Really appreciate you. And we'll put links to all of that in the show notes. So thanks.
Pleasure. It's been super fun. Thank you.
Hopefully we can do another one.
Love to.
Yeah, that'd be great. All right. Thanks for listening, everybody. And we'll speak to you soon.